Form SSA 634, Request for Change in Overpayment Recovery Rate. So Social Security beneficiaries may complete this form when they're requesting that the Social Security Administration adjust the rate of withholding in the case they might have been overpaid, so that they can continue to meet necessary living expenses. Now, the Social Security Administration has certain flexibility on being able to adjust the rate of overpayment recovery for people who decided that they can reimburse or repay the Social Security Administration, but their cash flow situation warrants them taking a little bit more time. So if you're looking for a complete waiver of your overpayment because you don't feel like you'll be able to repay that at all in the relatively near future, you can request a waiver by filing Form SSA 632 instead. So we'll put a link to that in the show notes, as well as a link to this article that we've written, since we've written articles that cover each situation. So in this video, we're going to go step by step through this form. And again, you can access more information, more details in the article that we've written. We go into a little bit more depth. So there are 6 sections in this. I'll briefly go over each section, and then we'll come back and start with question 1. So there's section 1, identifying questions. Section 2, assets. We'll spend a little bit of time discussing supporting documentation and some tips and guidance on how to best present that. Section 3, which is monthly household income. Section 4, monthly household expenses. Section 5, income and expenses comparison. Section 6, financial expectation and funds availability. And finally, at the bottom, we've got the typical sworn signature under penalty of perjury, certification, and Privacy Act statement. So we'll go over that briefly. The Privacy Act statement basically says the same thing that it does on every Social Security form, which is that as a general practice, the Social Security Administration does not share your personal information except in the course of business or in the collection of debt or as otherwise authorized under federal law. And the Paperwork Reduction Act states that on average, it should take about 45 minutes to read the instructions, gather the relevant facts, and then answer the questions. One common question about this form is that whether or not someone should make an appointment and complete this form in person. Now, you can complete this form on your own, and you can send it directly to the Social Security Administration to avoid all of the hassle of dealing with bureaucracy. However, sitting down, there really isn't a substitute for sitting down face to face with a person as they go through the Form SSA procedures, particularly when you're trying to maybe negotiate on a payment plan that works for you and one that fits within the construct of what the Social Security Administration expects. As a general rule, based on the online documentation in the operating manual that you can find online, the Social Security Administration has a great deal of flexibility if an overpaid beneficiary is proposing a rate of change that allows them to pay back the overpayment in full within 3 years. So there's a lot more flexibility, to the extent that you might not even need to complete this form to be able to make your change. So for no other reason than that, I would recommend you take the time to set up an appointment with your local Social Security Administration office and sit down in person with a representative. That way you can come away from that conference with a little bit more confidence in what your plan is going to look like. Conversely, if you just complete this form, the instructions state that you still have to bring it to a Social Security office. But if you're not even going to, try to have a discussion with that person, you're basically kind of firing and forgetting, and then you might get a response back in the mail that you don't really want to see. So you might get a less than desirable result. So I would suggest that you take the additional time to kind of walk through this with a Social Security Administration representative. So let's go to the top of this form. So I've already completed this form on behalf of our hero, John Doe. In question 1A, we're simply asking, and so in this section, we're identifying the person that's completing this tax form or this Social Security form. It doesn't necessarily have to be the overpaid Social Security beneficiary. It can be someone that's related to that person. It can be the representative payee or a legal guardian. So what we're doing in section 1 is simply establishing the identity. So in 1A, we're discussing the name, Social Security number, and if applicable, a claim number for the overpaid person. So even if you're filling this out on behalf of someone, keep that in mind. So in this case, John Doe, our hero, completed this form himself. We've got his name, we've got his Social Security number, and we've got his claim number. And then we've got his testament in 1B that he is indeed the overpaid person. But if not, he would complete 1C to indicate whether he is the parent, spouse, representative payee, legal guardian, if he has some other relationship, or if there's a combination of any of those situations. You check all that apply, and then you'll move on to line D, 1D. So if you're not the overpaid person, what is your name? Or do you work for an organization such as a nonprofit? Are you working for a company that helps people with Social Security benefits? In question 2, you would check all that apply. So supplemental security income, known as SSI, temporary assistance for needy families, a need-based pension from the Department of Veterans Affairs, regular Social Security benefits. This could be disability benefits or retirement benefits, or you're not receiving benefits at all. So the SSA does afford a little bit of extra consideration for persons that are on a need-based program. And again, the goal of a change in overpayment recovery rate is to come up with an objectively payable amount that both the beneficiary and the Social Security Administration agree is 1, affordable, 2, realistic, and 3, will not present a greater risk to the overpaid person's financial situation. After all, if this is a mistake caused by the Social Security Administration, part of the recovery process is to make sure that this person does not need to come back and apply for any of these need-based benefits. In question 3, it would indicate the amount that you owe. If you're completing this in person at the office, you can probably get the current balance from that person. And then in question 4, you would enter the amount that you believe that you can afford or have withheld from your payment every month. So in this case, John Doe wrote in $250 a month on a $5,000 balance. That in itself would mean that he's able to pay this off over 20 months. And if he took this into a Social Security office, they may very well be able to make the adjustment on the spot. Hey, you're paying $250 a month. We initially started charging you $450 a month, but $250, that still pays you off within 3 years, and they may be able to just approve it without having to go through this formal filing process. So that is a benefit of going to the office in person. So once you've completed section 1, we're going to move down to section 2. But before that, now we're starting to get to the area where everything you list in your assets, your income, your expenses, all of this is going to require supporting documentation. Your supporting documentation, according to the Social Security Administration, should not be older than 3 months from the date of your repayment request. So in other words, if you are using a mortgage statement from 6 months ago, it's probably not going to be current enough for someone to take a look and say that that represents your current situation. So, but examples of supporting documents would be a current mortgage statement, utility bills, medical bills, insurance bills, canceled checks, bank statements, pay statements, your most recent income tax return. All of these, if you're going to demonstrate either some sort of income or assets or debts or expenses, you should be able to provide a piece of supporting documentation that is current and that reflects what you're saying in this statement. And so an additional piece of advice would be for anything that you plan to provide, I would suggest making copies of it. The Social Security Administration will request this. They may request to keep it with a promise that they'll send everything back to you, but I would always make a copy just so that you have it in your records in case something happens. So in section 3, we're going to outline assets, which are things that you either have or that you own. So in question 5, we're talking about financial assets. Specifically in 5A, they're asking how much cash you have in your possession. In this case, John Doe has $1,000. In line 5B, they ask you to list your financial accounts. So you've got a checking account with a $5,000 balance. He's got a Roth IRA with a $10,000 balance that generates on average about $25 per month. We've got all the requisite name of the financial institution, the name on the account, balance or value of the account numbers. And at the bottom, you would simply total everything. Now, I can't do this in this form. This fillable PDF won't let me do it, but in this case, it would be $15,000 and then $25 per month. You would enter the totals here. In question 6, there are 3 parts, and this specifically asks about information regarding other assets that you may be able to sell if you were in a pinch in order to reduce your overpayment. I don't believe that the Social Security Administration intends to force people to liquidate their property, but at the same time, they're striving for a balance, right? So if they overpaid you, the Social Security Administration is responsible to the rest of taxpayers to be able to get that overpayment back at some point. So in question 6A, we're going to list any vehicles that might be in excess of one family vehicle. So one family vehicle is determined to be necessary for ordinary and necessary living expenses. This could be a car, SUV, truck, van, whatever it is. Anything in excess of that, you would have to list that to include who owns the vehicle, the year, make, and model of the vehicle, the present value, any loan balances that might be outstanding, and then what you're using this vehicle for. We're going to do the same thing in questions 6B and 6C as it relates to real estate and then other assets such as business interests, property, or valuables. So in 6B, we wrote that John Doe has a rental property. It's a single family home valued at about $200,000. He's got a mortgage of about $150,000. Income amount, he makes about $1,000 a month from the rental property. So I would include your income amount after your expenses. But you have to be careful to make sure that you're not making duplicate entries. So if you've entered an income amount that's net income after your mortgage, your insurance payments, things of that nature, you can't then turn around and list that as one of your household expenses right down here in section 4. You can't double dip on this either to your benefit or to your detriment. So be careful about making sure that there's one place for each item of income, each expense, each asset, and each liability. And in section C, this would be any business interests. So if John Doe has, if he owns ABC Enterprises, and he's had this, this is a landscaping business, and he's evaluated at $100,000, but he's got a $20,000 loan against it for some reason, and let's just say he makes $10,000 a month. That's how that would look. And then at the bottom of each of these sections, you would add all of these and you would enter the total. In section 3, we're going to discuss monthly household income. So this is going to be monthly take-home pay from either employment or a variety of other sources. So in question 7, first, are you employed? Yes or no. If you are, you're expected to complete the rest of question 7. So in this case, we wrote down that John is employed by Acme Employers, the biggest employer in his hometown. He is paid twice a month on the 1st and the 15th, just like back in the military, and he brings home about $2,500. This is net after taxes, after deductions. So we're going to get to a point where we're going to add deductions to this, and you're going to need to make sure that if, for example, you have health insurance taken out as a paycheck deduction, this already reflects that. So you would not put that health insurance cost under this expense. That would be considered double dipping. So make sure that you're staying accurate with the amount that you're taking home net. Now there is a difference between being paid every 2 weeks versus being paid twice a month. If you're paid twice a month, you can simply multiply that monthly amount, and then that would show as a monthly amount when you get to line 9A, right? So this basically means that whatever you need to do to adjust it, this should be a monthly amount. So if this is $2,500 a paycheck, then this would be $5,000 a month in line 9A. Now, twice a month versus every 2 weeks, it's a slightly different adjustment. So there are, if you're paid twice a month, that means you receive a paycheck 24 times a year. And if you receive a paycheck every 2 weeks, that means that you are paid 26 times in a year. And so there's an adjustment that you would need to make to your paycheck to make sure that you're reporting the correct monthly amount. And you can find that adjustment in question 7 of our article. Take a look at it. We walk through how to make that calculation on your own. That way you can actually see it in person and not have to just listen to a description of that calculation. In question 8, we're going to talk about whether or not someone else, whether it's a person, whether it's a group or an organization, is supporting your living expenses, and whether or not you have a loan agreement in place to do so. So in this case, John does not receive outside support, and it's not so he can go directly to question 9. If he did receive outside support, then he would have to answer the question about whether or not it's under a loan, and then how much money he receives on a monthly basis. And then this amount would also be reflected on line 9I. So he would simply carry down that value here. In question 9, we're going to fill in the blanks for all of these different items of income. So his take-home pay right here for John would be $2,500 times 2, $5,000. If he were collecting Social Security benefits or SSI, he would enter those amounts here. In question 9D, I've outlined that his military pension, he earns $1,500 a month. This could be a VA pension, which would be maybe disability or pension. So call it $1,000 a month. If he received any external income from real estate, other support, or income from assets, you'll notice on this form that those fields are white. So I can't fill them in here on this form. However, you can simply pencil and ink that, and then you would add the total here. So in this case, that would be John's $5,000 plus, I'll take this out just because I added that last minute. So it would be $5,000 plus the $1,500, so $6,500. But again, if he had child support or alimony, he would enter that. If someone was paying him room and board, which I think would be different from the rent income outlined up here under his rental property, I take this to mean that you're renting out a room in your house. And the distinction would be when you get down to section 6 and it asks you whether or not you can sell an asset. One of the assets that they're asking about is whether or not you can sell your rental property. Well, you can't really sell your rental property if you're renting out your room to a person that's not a dependent. So that's why this item here exists here in 9G. So you would enter the total. If you have any remarks to add, if there's anything that the form specifically asks you to document, if the representative asks you to provide an explanation, that's what this space is for. In section 4, we're going to do the exact same thing, except this is for household expenses. So again, don't list any expenses that are automatically withheld from your paycheck, and make sure that you show monthly average amounts. So for example, utility bills may fluctuate. Take your bills as they occur over the course of a year, divide that by 12. That would be a good way to come up with an estimate of how much your utilities cost. So in 10A, we're paying rent or mortgage, but if this includes property or other local taxes, insurance, you need to take those items out. Either take them out of here or don't include them in the respective insurance. And then there is a tax payment line here, right? Property tax. So make sure that you're only reporting, those items in one area or the other. Food, this could be groceries, it could be food at restaurants, it could be food that you bought with SNAP benefits if you're entitled to those. And 10C, we're discussing utilities, so legitimate bills. That might be gas, electric. It could be a phone line, either a cell phone or your landline. It could be your internet access, trash collection, water, sewage. That combination goes here. If you pay for outside heating or cooking fuel, like if you have a propane tank refilled on a regular basis, if you have an oil tank that's filled on a regular basis, if you have to buy wood or coal for heating purposes or cooking, you would outline that here. Clothing is a fairly self-explanatory expense. Household items for personal hygiene, things of that nature. Property tax and insurance, we've covered that. Medical and dental, so these would be out-of-pocket costs that weren't paid by insurance and not reported as part of your paycheck. So if you're paying out-of-pocket for like co-pays and things like that, you would enter that in here in 10I. 10J would be the cost of your vehicle loan or lease. 10K would be expenses related to your vehicle, so gas, repairs, oil changes, things of that nature. If you need to use other transportation like buses, public transit, ride sharing like Uber or Lyft, you would enter that in 10L. If you have school or tuition expenses, you would outline them in row M. Court-ordered payments that were directly paid to a court would go in here. Let's see. You've got credit card payments. That would be the minimum monthly payment. But again, don't include any expenses that you've already shown. And then if you were paying, like for example, child support or alimony that wasn't paid to a court but paid to, the recipient directly, you could probably put that in here. This $5,700 is basically the total of all of these numbers. I put them in here since I can't put them in this white space. But if there are any unusual, any extra large expenses, you can use the expense remarks section to provide additional information. In section 5, we're going to take mostly information from the previous questions, and we're going to enter that here. So your monthly income would go in question 9, your monthly expenses would go in question 10, and then you would subtract the total. Logically, this should be in line with the amount that you feel that you can repay. If your expenses are more than your income, you'll be asked to explain that. And then, of course, the Social Security Administration has procedures and guidance in place to kind of maybe meet you in the middle or nudge you in a little bit closer direction based on what this looks like. And again, all of your supporting documentation should go to directly reflect your situation here. In section 6, this basically discusses the potential of any future money that you might be expecting or anything that you could convert to cash if you're in a dire situation. So in 13A, do you expect to receive an inheritance within the next 6 months? Most people might answer no unless there is a situation where they know that they're expecting an inheritance and the person is expected to pass away within the next 6 months. And then in 13B, You would provide any explanations on why you could not sell or convert the balance of any financial assets listed. So this would be anything you put into line 5B, any the extra vehicles, real estate. Put your best explanation here. If I were in this situation, I would probably be trying to find a way to repay my overpayment without having to liquidate my retirement accounts, which could then jeopardize my retirement and cause a great tax burden. So, be frank, be honest, but also, kind of try to take a opportunity to understand the Social Security Administration's perspective. If your explanation sounds silly, then they might not take it as seriously. But if you say, I'm underwater on my rental property, so if I sold it, I would have to pay extra money to close, that's a legitimate reason. If you had to, if you had a bunch of stocks, but then you would have to pay taxes on, most of that because it was all profit, and you say, if I sold this, I would have an extra $10,000 of taxes, that could be considered a legitimate concern that you would need to explain. It doesn't necessarily mean that the Social Security Administration will agree with your position, but you should be as forthcoming and as frank and honest as possible. And then, of course, in line C, you're going to be expected to provide the total of your assets from all of these questions. And if you have any additional remarks that you need to make, any comments, please put them in the remarks space as outlined. On page 7, you're going to sign this form either as the overpaid person or the representative payee. And again, the first 6 pages were all on behalf of the overpaid person. But the signature could be the overpaid person or the representative payee. And then you would date it. You would enter the telephone number, mailing address, any city, state, and zip code as outlined here. Technically, you'll see this information on every most Social Security forms. A person can sign a legal signature with a mark as annotated by an X, and if they do so, then they need to provide 2 witnesses that affirm that they know the person as an individual. They would sign and then write their address, full address, in this section of the form. All signatures are required to be in ink. Generally, anytime you complete this form, it should be in blue or black ink unless otherwise specified. And again, on the back is additional information about the Paperwork Reduction Act and the Privacy Act, which we already covered. So that's all we have for this Social Security form walkthrough. We go into a little bit more depth in our article, which you can find if you go to our website. Simply go to teachmepersonalfinance.com, type in form SSA 634, and you should see our article appear. We'll also put links in the show notes to this, as well as form SSA 632 in the case you're trying to make a decision on which course of action you would like to pursue. If you like our articles, please subscribe to our newsletter. And if you like our YouTube channel or our YouTube videos, please take the time to hit the subscribe button. And as always, if you have any questions, comments, or concerns, please post them in the comment section, and I'll do my best to answer them. Thank you very much, and have a great day.